Imagine a company preparing for one of the biggest IPOs of the decade, a company millions of people see as the future of humanity. Now imagine opening its own financial filings and discovering billions in losses, massive transfers between companies owned by the same person, and transactions that would raise serious questions in almost any public corporation. This isn't the story of a struggling startup. This is the story of SpaceX. The problem. A few days ago, SpaceX finally released the filing investors had been waiting for. Hundreds of pages of financial disclosures, contracts, risk factors, and corporate details. And the deeper I went, the more one thing became clear. This is no longer just a rocket company. It's not even primarily a satellite company anymore. What emerges is a complex ecosystem where the success of one Musk company appears to support the weaknesses of another. The rise. For years, SpaceX has been one of the most admired companies on Earth. Reusable rockets, NASA contracts, Starlink, record-breaking valuations, and an army of loyal supporters. Every launch is treated like a historic moment. Every milestone becomes proof that Elon Musk is changing the future, even when things don't go entirely according to plan. When Starship completed another test flight, many headlines described it as mostly successful. Mostly successful. And that's where the real story begins. Because once a company becomes legendary, people often stop separating reality from marketing. The mistake. According to the filings, one of the most important parts of the SpaceX story today isn't space exploration. It's artificial intelligence. Specifically, XAI. The problem? XAI appears to be consuming cash at an extraordinary rate. Billions of dollars, year after year. And somebody has to pay for that. The turning point. That somebody appears to be Starlink. Starlink is one of the few businesses in Musk's empire generating substantial profits. Billions in revenue. Billions in operating income. A real business producing real cash flow. But instead of those profits remaining inside Starlink, large amounts of capital are being redirected into AI infrastructure, data centers, and XAI-related projects. In simple terms, the profits from satellite internet are helping finance the losses of artificial intelligence. And that's not the only concern. The filings also highlight enormous AI-related contracts that, at first glance, look incredibly impressive. Multi-billion-dollar opportunities, huge future revenue projections. But buried in the details are clauses that allow some of these agreements to be terminated far sooner than most investors might expect, meaning a significant portion of the future growth story depends on contracts that may not be nearly as secure as they appear. The consequences. Then we get to what may be the most controversial part of all. The filings show that SpaceX spent hundreds of millions of dollars purchasing products and services from Tesla, including a massive number of Cybertrucks. And that raises an obvious question. Is SpaceX buying these vehicles because it genuinely needs them? Or is it helping support the sales figures of another company owned by the same person? Because when one company uses shareholder capital to purchase large amounts of products from another company controlled by the same owner, conflicts of interest become impossible to ignore. At the very least, it creates the appearance that one business may be supporting another. And that is exactly the type of relationship investors should examine carefully. The bigger picture. This story isn't really about rockets. It's not about electric vehicles. And it may not even be about artificial intelligence. It's about what happens when a business leader becomes larger than the companies themselves. Because once a cult of personality forms around a founder, critical analysis often disappears. Supporters stop asking questions, the media lowers its standards, and investors start buying narratives instead of numbers. The lesson. The most successful companies in history were built on profits, discipline, and transparency. Not hype, not hero worship, not endless promises about the future. Investors should never buy a story. They should buy the numbers behind the story. And when the numbers begin to contradict the narrative, that's the moment to pay attention. Because corporations rarely collapse overnight. They fail in slow motion. First, transparency disappears. Then trust. And eventually, Reality arrives with the bill. The only question is, who ends up paying it?